Hello students, good morning and welcome back to the online class. So we'll continue with the illustrations on fire insurance claim. So in the previous class we solved one problem on average clause method. So we'll continue with the average clause method. So which such type of problem they are going to ask in the semester examination, okay? And this problem you have to solve now. I will tell what are the steps you have to follow. So remember one thing, whenever they ask you to calculate the average clause or in the problem if they mention the policy amount, then you have to follow, then you have to work the problem on the basis of average clause method, okay? Or they will mention the they will give the instruction that is there is an average clause. So you see this in this problem they were given it as the claim was subject to an average clause, okay? So either they will give the sentence, or if they give the policy amount, then you have to calculate the average clause. Sorry, you have to apply the average clause method, okay? So that is the last step. So before that, what you are going to do, you have to see the information. If the rate of gross profit is not given, or the amount or the rate of gross profit, if any one information they have to give in the problem, if they not give that information, then they have to give the information, that is the item that is that comes in the trading account, that is previous year information they have to give, okay? If the rate of gross profit or the amount of gross profit, if it is not given, then in problem they will give the items that comes in the trading account that is relating to the previous year, and they will give the informations relating to the current year, okay? Now if the rate of gross profit is given, then it is very easy. Then you have to directly start with the memorandum. So first some problems, right? From illustration number 1 we solved some problems where the rate of gross profit is given. So we directly started with the memorandum trading account, and I assume that you are very clear with that. If the rate of gross profit is not given, then what you have to do? So don't copy the question. First you listen to me. If the rate of gross profit is not given, then you have to first prepare the trading account for the previous year. Then you have to apply the formula, that is the calculation of rate of gross profit. Again we solved illustration on such problems. So please go through that problem. You have to calculate the rate of gross profit. Then you have to go prepare the memorandum trading account, then the statement, right? If they give average clause, the first two things that you have to observe, that is whether the rate of gross profit is given or not. If not given, start with the trading account, then you go to the rate of gross profit, then you go for the trading account, then the statement. If the rate of gross profit is given, then it's very easy. You directly start with the memorandum trading account, okay? The what changes you observe in average clause means at the end you have to apply one formula, then you have to calculate the amount of claim, that is actual loss ka figure you will get. If on that actual loss, how much you can claim from the insurance company, okay? That is what the average clause. Not that entire policy amount you can claim. You have to take the proportionate, and if you forget the formula, you have to apply the cross multiplication. So in this problem, again I will explain how to do the cross multiplication. But one thing you have to remember in mind, if the average clause is applied, then you have to start with the trading account. If rate of gross profit is not given, please note, if rate of gross profit is not given, then you have to start with the trading account. So you have to start with the trading account, then you have to prepare, then you have to calculate the rate of gross profit, then you have to do the memorandum trading account, where you have to the difference will be the closing stock, then you have to prepare the statement. Now you just copied on this problem, and this is similar to the previous 8 problems. I think ninth one we solved one problem, that is a small problem on average clause, right? So ninth problem, till ninth problem what you solved, same thing you have to follow here. So you have to copy down this problem, then you have to solve this problem till the statement, okay? Till statement, that is the statement showing the loss of stock, that is actual loss of stock. Till there you have to solve now the average clause formula and the answers that I am going to tell you. If you know, if you're clear with that, then you can solve it also, okay? You can go for that also. You can complete the problem and you just wait for the answer, okay? So you just copy down this problem, read the problem carefully. See here, there is a 10% cost less 10%, cost plus 10%. So same problem we solved, right? I think illustration number 8 or 9. Okay, similar problem we solved. So once again I repeat, take down this problem, solve the problem. If you are clear with the average clause, then you go with that. You just complete the problem, After sometimes I'm going to display the answer. You just check it. Still, if you get any doubts, you just contact me. Okay. So now to copy down this problem and to solve this problem, so I will give 5 minutes because it is very easy. You can do it very easily, right? So just 5 minutes, 2 minutes to copy down the problem and 5 minutes to solve the problem. Okay. Total 7 minutes. Okay. Start. So take down the problem and do it fast. Do it fast. 2 more minutes. Okay, check your answer. So you have to prepare trading account for the year ending 31st December 2018 because that is the closing date of previous year. So before that you have to make note of points. So one, that is there is a practice in the firm to value stock at cost less 10%. Okay. So earlier they were valuing the stock at cost less 10%, but they suddenly they changed the practice and valued the stock on 31st December 2018. So that is a closing date. That is a closing stock, okay, at a cost plus. So opening stock they were valuing at 90%, closing stock they were valuing at 10%. Okay. So that is the two things. And the another one, that is the amount of policy, that is 40,000 is given. Okay, check your answers. Two opening stock. So here it is 36,000. 36,000 into 100 divided by 90 because I want the total cost of the stock. So it was 90 because they were valuing at cost less 10%. So I want 100. So I hope you, I think, and I assume that you are clear with this thing. Okay. If you have any doubt, you can contact me personally. Okay. So it comes to 40,000. Then the closing stock that will record at the last. Purchases during the year 2018, that is a previous year purchase. Okay. So that you have to record directly. Sales for during 2018 is, that is previous year ka 6 lakh. Then the closing stock. This information that is relating to the current year. So the closing stock at cost. So you want at cost 66,000 into 100 by 110. Why 110? Because they were valuing at cost plus 10%. 100 plus 10%. So it comes to 110. Okay. So the balancing figure is gross profit. So next you have to calculate what is the rate of gross profit. Right. So I hope you know the formula. That is, the rate of gross profit is equals to gross profit divided by sales into 100. So I will just display the figures. Okay, you have to do the calculation. That is 1,40,000 divided by 6 lakh into 100. It comes to 23.33%. 23.33%. Okay, next account, that is memorandum trading account for the period between 1/1/2019 to 30th April So 34 2019. So first you have to take the opening stock. So opening stock of current year, that is the closing stock of previous year. Okay. So previous year ka closing stock will be the current year ka opening stock. So previous year means you see the last ledger account, that is trading account. In that way we return it as 60,000 by closing stock. That will be the opening stock for the current year. Next, purchases. See there, purchases from 1/1/2019 to the date of fire, 2,30,000. Then they have given sales. Sales from 1/1/2019 to the date of fire, that is 3 lakh. So, you know what is the rate of gross profit. Now you can calculate what gross profit, right? So it is always calculated on sales. So to gross profit, that is 3 lakh, that is sale figure, into 23.33%. So the difference is closing stock by closing stock. Okay, that is 60,000. So next one, that is statement. Okay, next, that is the statement. So statement showing loss of stock. So value of stock on the date of fire, you see the memorandum trading account, closing balance, closing stock, that is 60,000, less the stock salvaged. Here it is. All the stocks were destroyed except up to 13,000. Means you could save 13,000. Apart from that, means up to 13,000 you saved, the remaining everything is destroyed. So the amount of loss suffered by the trader. So trader or the company, okay, here it is limited, so you make it as a company, or you can write value of stock destroyed by fire, 47,000. Okay, so next, if there is average clause, next you have one more step. Otherwise you have to stop till here. If there is average stock, there is a one more step, that is you have to calculate what is the amount of claim. Means though you have taken the policy of rupees 40,000, it is not that entire 40,000 you can claim. No, we are applying one clause, that is average. Average clause means it is nothing but it is the proportionate. Means how much I can claim. See, as per the memorandum trading account, my closing stock was 60,000. So I cannot claim entire 40,000, but out of that 60,000, I could save 13,000, right? Means 47,000 is the actual loss. It means if 40,000 policy is taken for my closing stock, that is 60,000. My closing stock is 60,000. My policy amount is 40,000. Then what would be my policy amount if the actual loss is 47,000? So that is cross multiplication, or you can apply the formula. I repeat, my closing stock was 60,000. My closing stock was 60,000. K means 1,000. My policy amount is 40,000. Means it is not that as my closing stock is 60,000, I could entirely claim the policy. No. But what is the actual loss I incurred? I incurred 47,000 only. Correct? I incurred 47,000 means what figure I can claim from the insurance policy, that you are calculating here. That is closing stock. You have to do the cross multiplication. That is 47,000. That is the actual loss. You can see the formula here. What is the actual loss? See the statement. How much you got? 47,000. Sum assured means what is the policy amount? 40,000 means this into this. That is nothing but 47,000 into 40 divided by 60. Oh, what is 60 now? The value of stock on date of fire. That's all. If you forget the formula, you do the cross multiplication. Then you see the figure. Then you just write the formula. Now, if you forget the formula, what you can do? You will write 47,000 into 40,000 divided by 60. Now, what is 47,000? That is the actual loss. So, you create one formula. Actual loss into what is 40? That is the policy amount. You can write amount, policy amount, divided by 60,000. What is this? The value of stock on the date of fire. That's all. That is what the formula. So that is 47,000 into 40 by 60,000. That comes to rupees 31,333. So this is average clause. Means entire procedure that you are very clear, because problem number 9 till problem number 9 we solved entire illustration, entire method, entire procedure, right? But the only one change is that is you have to apply the formula and you substitute the value. That's all. That is what average clause. So we'll get 12 marks problem from this method. Okay. So to apply the average clause, you will get 12 marks, and it's very easy. So now I assume that you are very clear with that, and you got full 12 marks, right? So in your pocket you added 12 marks. So now we'll move to the next illustration. Again, that you have to do. Okay. See this problem. A fire occurred in the premises of Akshay on 15/7/2021. That is yesterday's date. Okay. Yesterday's date 15. From the following information, calculate the claim. Calculate the claim is that is the amount of claim. Why you have to calculate amount of claim? See here, the value of policy is given, and they have given that there is an average clause policy. Means you have to calculate the amount of claim. It is the practice of the trader to value the stock at 10% less than the cost. Means both opening as well as closing they were valuing at 90%. Okay. So here you see the information. Stock is given, that is of previous year 1/4/2020. That is the previous year. Stock on 31/3/2021. That is the closing date. Okay. Don't get confused with this. See, the opening date is 1/4/2020. Then what is the closing date on that? That is 31st March 2021. That is the closing stock. Purchases for the year ending means previous year, not the current year. Though it is 2021, you have to see the opening date. Then you have to see on the basis of opening date, you have to see which is my closing date. If my opening date is 1st January, then the closing date will be 31st December. If my opening date is 1st April, then my closing date will be 31st March. Okay, be careful. So purchases, that is of previous year. Sales, again that is of previous year. Wages 31/3 means previous year. Manufacturing expense is the trading item. Okay, to manufacture the goods. So again this is trading item, previous year. You have to include this item. When you prepare trading, you have to write to manufacturing expense. Salaries. Now whether salary is the trading item? No, it is a P&L item, indirect expenses. To confuse you, they will give some P&L item. Okay, so but you be careful, don't take P&L item in trading account. You are just stopping, you just stop till gross profit. You just calculate gross profit and you stop the account, you just close it, right? So if they give the P&L item, ignore that item and don't take it anywhere. Okay, just to confuse you, they will give such items. So salary, it is completely ignored. You're nothing to do with the salary. Purchases from 1/4/2021 to the date of fire means current year. Sales, current year. Current year only two information. So first you have to take the opening stock, then these two information, then you have to write the gross profit, then you have to find the difference. Okay. Again, this you have to do now. This problem you have to do. So again, 2 minutes to copy down the problem and 5 minutes to solve the problem. Yes, do it fast. So okay students, check your answer. So let's start with trading account. So the trading account for the year ending 31st March 2021. Opening stock, you have to convert it into cost, that is into 100, right? Divided by 90. They are given purchases, wages, manufacturing expenses. They are the direct expenses, so debit side. Sales, credit side. Then the closing stock. Again, you have to convert it into 100, that is cost. The difference will be gross profit, that is 1 lakh. So next, you have to calculate rate of gross profit, and I assume that you know how to calculate rate of gross profit, right? Your rate of gross profit is 20%. Gross profit divided by sales into 100. Next, you have to prepare memorandum trading account for the period between 1/4/2021, that is the opening date, current year ka opening date, to 15/7/2021, that is the date when the fire occurred. So your opening stock, that is the closing stock of previous year, your purchase sales. Opening stock 90,000, that is the closing stock of previous year. Purchase, it is given there, purchases from 1/4/2021 to the date of fire. Sales 3 lakh, it is given. Gross profit, you just now calculated what is the percentage of gross profit, the rate of gross profit, sorry. So that to be multiplied into sales, that is sales 3 lakh into 20%, it comes to 60,000. And the closing stock, that is balancing figure, 50,000. Next, you have to prepare the statement. Statement showing the loss of stock. So value of stock on the date of fire 50,000. That figure you get in the memorandum trading account. Just now we calculated. Stock salvaged, it is given there. See here, it is given here. Stock salvaged 10,000. So difference, the net figure, that is the value of stock destroyed by fire. So next you have to calculate the amount of claim. So formula, actual loss of stock into sum assured divided by value of stock on the date of fire. Again you can do the cross multiplication. What is the value of stock on the date of fire? That you have to see there. Okay. Then you have to take the policy figure, that is 30,000. So you have to find out what is the value of the policy that I can claim if my actual loss is 40,000. So my closing stock is 50,000 and the sum assured is 30,000. If my actual loss is 40,000, then what amount I can claim? It comes to 24,000. Okay. So if my closing stock is 50,000, I can claim 30,000 because that is a policy amount. If my value of loss is 40,000, then I can claim up to 24,000. Okay. So this problem I am winding up today's class. Okay. So we will solve some for three or four problems on this, and then we will move to the new chapter. Okay. So I wind up today's class till here. So again, you practice this problem, okay? Because they repeatedly they were asking this such type of problem for your semester examination. Okay, thank you.